Imagine waking up one morning and realizing that your money didn't disappear, but somehow it buys less of everything. Your grocery bill is higher. Your rent is higher. Your insurance is higher. Even a simple cup of coffee costs more than it did a year ago, and yet your bank account shows the same number of dollars. This is the strange thing about currency decline. Most people don't notice it until it's already happening. They think wealth is about how much money they have. But history shows that wealth is really about what your money can buy. And whenever a currency loses purchasing power, people who only hold cash usually suffer the most. The people who come out ahead aren't necessarily smarter. They simply own assets, things that tend to rise when money becomes weaker. Today, we're looking at 5 assets that many people may wish they owned before the next major decline in the dollar. Because by the time everyone is talking about them, it may already be too late. For thousands of years, civilizations have come and gone. Empires have collapsed. Currencies have disappeared. Governments have failed. Yet gold has remained valuable. Why? Because unlike paper money, gold can't be printed. No central bank can create trillions of dollars worth of gold overnight. Its supply grows slowly, and that scarcity is exactly why investors often run toward gold during periods of inflation and uncertainty. Think of gold as financial insurance. You don't buy insurance because you expect disaster tomorrow. You buy it because you understand what could happen eventually. When confidence in currencies falls, confidence in gold often rises. That's why gold has survived every monetary experiment in human history. A decade ago, most people laughed at Bitcoin.
Today, some of the world's largest institutions own it. The reason is surprisingly simple. Bitcoin was designed with a fixed supply. Only 21 million will ever exist. Not 22 million, not 50 million, not unlimited amounts whenever governments need more money. For supporters, Bitcoin represents something radically different from traditional currencies, a monetary system where supply cannot be manipulated. Critics argue it's volatile, and they're right. Bitcoin can experience enormous price swings. But many investors aren't buying Bitcoin because it's stable. They're buying it because they fear what happens when fiat currencies become less stable. Whether Bitcoin ultimately succeeds or fails remains uncertain. But one thing is clear. Millions of people now view it as digital scarcity in a world of unlimited money printing. When people think about inflation protection, real estate often enters the conversation. And for good reason. Real estate is a real asset. People need places to live. Businesses need places to operate. Land cannot simply be printed like currency. Historically, property values and rents have often risen during inflationary periods. As the dollar buys less, tangible assets frequently become more valuable in dollar terms. But there's another advantage: debt. Imagine owning a fixed-rate mortgage. If inflation rises significantly, future dollars become worth less, yet your mortgage payment stays roughly the same. In some cases, inflation can quietly make debt easier to repay. This is one reason many wealthy investors love real estate during long periods of monetary expansion. When people hear warnings about inflation, some rush into cash. Ironically, cash is often the asset being damaged. Strong businesses can be different. Think about companies that sell products people buy every day: food, technology, healthcare, energy. When costs rise, many of these companies can increase prices. That means their revenues may rise along with inflation. Over time, the value of successful businesses often grows faster than the value of cash sitting in a savings account. This doesn't mean every stock is safe. Far from it. Many companies fail. But ownership in productive businesses has historically been one of the most powerful wealth-building assets ever created. Because while currencies can weaken, great companies continue producing value. This final asset may be the most important, and almost nobody talks about it: your skills. Think about it. If the dollar loses purchasing power tomorrow,
What happens to someone whose income never increases? Life becomes harder. But what happens to someone who can create more value? Someone who can solve problems, build businesses, sell products, market services, write code, manage teams, create content, learn new technologies. Their earning potential can adapt. Most assets require money to buy. Skills require effort. And unlike stocks, real estate, or Bitcoin, no market crash can completely erase them. The highest return investment many people will ever make is not in a financial asset. It's in themselves. Because income is often the engine that allows all other investments to happen. Outro. Here's the reality. Nobody knows exactly what the dollar will do next year. Predictions are easy. Accuracy is hard. But history teaches one lesson over and over again. People who rely entirely on cash tend to struggle during periods of currency debasement. People who own productive, scarce, or valuable assets often have more protection. Gold, Bitcoin, real estate, quality businesses, and perhaps most importantly, skills. The goal isn't to predict the future perfectly. The goal is to prepare for multiple possible futures. Because when major economic changes happen, the biggest opportunities usually belong to people who positioned themselves before everyone else noticed. And the most expensive assets are often the ones people wish they had bought years earlier. If you found this video valuable, subscribe for more deep dives into money, economics, wealth, and the hidden forces shaping your financial future.